mic check. Mic. All right, cool. We on. All right. Let's get back. I had to do a part 2 on this because my kids kept jumping in on this. But she's talking about how the super wealthy evade, skirt paying taxes because of the way the tax code is set up, and how the average person like you and I kind of get fucked a little bit. So we're going to go and let her finish talking. To catch the first, I'm going to do 2 parts. So if this is part 2 for you, then part 1 should be available in the content.
And so that is another justification. Even though they should just tax the gains and then people would sell.
It's also the word he uses here I think is interesting, fairness. I've been around this debate a long time. I've covered a lot of tax debates. I've covered debates on the capital gains tax rate. Get into a lot of arguments about efficiency and, the exactly right macroeconomic level to turn the dial to. And yet, as a human being, right, just experiencing the way income works, I work so hard for the income I make from my work. I mean, you're a delivery driver, you're, a doctor, doing primary care work, or a pediatrician. You're working so hard. And the idea that that is taxed so much more higher than somebody making money by just letting money sit in an index fund.
And that's where people have to understand that morally you thinking, I'm being a good person, I'm being a good boy, I'm being a good girl. I work hard. I should be rewarded for my hard work. I should be rewarded. My tax liability should be, I should be the one enjoying the benefit instead of some rich fat cat sitting up, like I said, with an index fund or with property that's inherited, gaining all the tax benefits and having all the loopholes to not pay more in taxes, which build roads and things that we need, right? Shouldn't the heavier burden be on the wealthy that aren't working necessarily, that are just enjoying their wealth? Maybe they have worked for it, but it's very different than collecting wages. Like he said, shouldn't I be rewarded for my hard work? But there's just, that's kind of, you gotta kind of get your head out of the clouds. Don't be that naive to think that the world is set up like that. The world is set up to operate on what's most beneficial to those at the top. And the wealth that they have accumulated is more beneficial to other, countries and things on this planet than your hard work. Your hard work just gets used up. You will pax it.
Right. Or just occasionally clicking a button to move it between different investments. There is a fairness question here. It's cruel. I don't think it's actually quite cruel. It is so easy to let your money make money for you. The fact that we reward it over work is crazy to me.
Right.
I totally agree. And you know who else agreed? Ronald Reagan. In the 86 Tax Act, they actually succeeded in equalizing for a very brief period capital gains rates and ordinary income rates. They got rid of the preference for capital gains, which we should definitely do today. Now, one of the arguments that someone's going to make is, yes, but everybody is better off when rich people take their money and they invest in the economy. That's what makes the whole country grow. But the thing is, much of this money this is not seed capital to start local businesses. This is money trading on a secondary stock market. It is not going to a business. It's going to other owners of stocks driving up the shares. So I don't buy that argument that this is growing the economy when people are putting their money in stocks.
Well, let me ask about a related dimension of this, which is the rise of stock buybacks.
Yeah.
And both how that has changed the way stocks work, and how that has changed the way taxable income presents or does not present itself.
We've been telling a story about wealthy people not paying taxes on their stock because their stock goes up in value. They don't have to pay tax on that gain. However, prior to 1982, because companies could only share their profits through dividends, what it meant to own a lot of stock was to get a lot of dividends. And for much of the 20th century, dividends were taxed at the highest rates, just like salaries. And so what that meant was that somebody who was sitting on a lot of stocks got a lot of dividends and paid a lot of taxes. However, in 1982, after this rule change, companies switched from issuing dividends. There used to be more than 70% of profits were distributed through dividends. Now it has never been as high as 20% since this change went into being. The effect of it is that companies began to do lots and lots of buybacks of their stock. And this had a tremendous impact on multiple levels. One is, if you look at the Dow Jones, there's a chart in my book that shows that in 1982, the Dow Jones was at about 3,000. It was also that in the 70s, the 60s, the 50s, the 40s, the 30s, and the 20s, it was around 3,000. It's inflation-adjusted amount. Now it's like in the 45,000, something like that today, right? So it switched from being a sine curve to being a hockey stick. And part of this story is stock buybacks, because stock buybacks boost the value of stock. But another important part of the story is that it meant that for somebody who owned stock, they no longer had to get taxable income because they could enjoy their profits through the increased value of the stock. Mm-hmm. Some shareholders would sell their stock because that's the nature of the stock buyback. However, a lot of these shareholders are tax-exempt organizations, so they're not worrying about paying taxes on their proceeds. So in terms of revenue to the federal government, owning stock, profitable companies used to provide a lot of revenue to the federal government in the form of taxation of dividends. And now with the rise of stock buybacks, that is much less likely to be the case.
So then I want to go back to the question of what happens to these great fortunes when they get passed down. How is that treated for you from a taxation perspective? Like when does that get taxed?
Okay, so if you receive it at death, then there is an extra benefit for people who receive appreciated property at death. And that is that not only are those gains not taxed to the person who held the stock, but when somebody receives the stock from inheritance, all the gains are wiped away. We call this step up in basis, or a
nice inscrutable name.
Yes, or the angel of death loophole.
That's better.
Yes. And the angel of death loophole says that we're going to wash away the gains and the recipient is going to be treated as if they had purchased the property.
Okay, I want to slow this down for a minute because I think step-up basis here is really, really quite important. Let's say somebody made just great investment. They bought NVIDIA when it was cheap. And, now some years later, they have $30 million worth of it. In one world, they sell that stock because, they want to buy a mansion or whatever it might be. In another world, they never sell the stock. They pass away and give it all to their kids.
Yeah.
What is the difference in tax treatment for that stock? It is the same tranche of stock.
Yes.
What happens in the two scenarios?
So in the first scenario, they would pay income taxes on this, on the capital gains. The capital gains is imposed at a 20% rate plus an additional 3.5% extra tax on it. So almost a quarter of it, of those gains, and it's almost all gains, would be subject to income tax.
And so the gains are the difference between what you bought it at and what you sold it at.
Absolutely. However, if instead you hold on to that stock and you don't sell it, and you pass it on at death to your kids, there is an extra bonus. And that is that not only did you not pay taxes on that gain, but when they get the property, they are treated as if they had purchased it for its fair market value. And so now they're treated as if they had bought it for $30 million.
Okay, so it was inherited, but they get the credit of actually buying it. That's bull.
Can turn around and sell it for $30 million and pay no gains at all. And that is this thing that we call step up in basis, or the angel of death loophole.
So the gains are just wiped away.
Wiped away. Not for you to worry about.
That's pretty sweet.
Yes, it's a very nice deal.
So what do you expect will happen?
All the
with
wealthy
Jeff
get the
Bezos
sweet
then?
deal.
Can he pass down 150 billion or whatever it is without too much tax implication, or
Well,
does
it's
he?
going to matter about 150. It seems like a lot of money. Chances are what these people are going to use are charitable vehicles as an important part of their tax-free transfers. And the problem is that these charitable vehicles afford these donors and their families enormous tax benefits while continuing to give them enormous power in the world. And some of these tax avoidance vehicles, if they set them up during life, are not just for charity, but are to influence politics. And that's because you can put money into
Right. And that's where it really gets, because they enjoy the loopholes that are set by Capitol Hill. And then they turn around and they can also enjoy the loophole of giving to charity. That's why you don't buy all this shit when all these rich people give stuff to charity. You know, oftentimes they give into a charity that's connected to an organization of a representative that's on Capitol Hill that's going to sway their vote in favor of the donor in some way, right? So it's all a little game that they playing in order to get favor on their side. And you know what I'm saying? When you got money like that, you can essentially buy, you know what I'm saying, votes, and you can buy people on, you know, government boards and stuff like that. While we sitting around thinking that these people on Capitol Hill in Washington, D.C. are making decisions for us, they're making decisions that best suit their pockets.
501c4, that's a particular type of organization that is allowed to engage in political activity. And under our current rules, when you give your appreciated stock, let's say somebody decides to give $50 billion to their C4, they get to have continued control over the assets and a tax-free path to avoid both gift taxes and capital gains taxes.
So let's talk about what you might do about some of this. I think something people are hearing a lot about right now is a wealth tax. One reason they're hearing about it is that there is a wealth tax on the ballot in California this year, a one-time 5% wealth tax. These operate a little bit differently for states and for the federal government. So let's begin with the one in the news, which is the California one. How would it work? What do you think of it? What are the considerations for a state thinking about doing this?
The wealth tax is an obvious answer to this problem. It says, all right, we have a lot of ways that people are avoiding taxable income and they have massive amounts of wealth. Let's tax their wealth, and we'll impose a flat tax, 5%. The problem for states is sort of a few problems, but one of them is that people can easily leave states. Now, California is trying to get around this problem of people leaving the state by making it this sort of retroactive one-time tax. It already applies retroactively to people who previously were living in the state, I think, as of January 1st. A retroactive one-time tax, I think, is it's not going to be a permanent solution to the problem, obviously. And nor do I think it's going to prevent people from leaving the state, because once there's done once, there's every reason to expect it will be done again. So I do think there is a problem for states in their ability to raise revenue because other states are trying to compete on these low taxes.
So you have, in that case, is something like Ron DeSantis in Florida.
Absolutely.
Trying to attract. I met a rich person not long ago who showed me an app they have that counts the number of days they spend in Florida, because they really want to live in New York.
Yeah.
But they live in Florida. I mean, they actually do live in Florida,
right. They have
just
to put in
enough
the time.
days a year to not pay New York taxes, which I found crazy, because I figured the whole point of being rich was to not have to worry about things like this.
You know, I think this is
But
why
people really do it, I guess.
Yes, I find it insane to be rich and to have to live somewhere that you don't want to live. But of course, this is why you're a podcaster and I'm a law professor, right? If we really cared about money, maybe we'd really care about taxes. And because to me, it seems insane, but people do that all the time.
So do you think the wealth tax proposal would be good for California, or is it something that, would just create a benefit for Texas because it'll pull in these rich people?
Well, it's hard to say that it's going to make a huge difference when it's just a one-time tax. So it would have to actually be a more permanent tax. And I think it has a number of problems. One of them is the problem of people leaving. But I think another really significant problem is how you're going to gather the information of how much wealth a person has. It's very easy to think about somebody who owns publicly traded stock, and we know how much stock they own, and we know how much they have. But there are lots and lots of wealthy people that own their wealth in other forms that are very difficult to value. And now you're talking about a state Department of Revenue having to build up the resources to have everybody tell them everything they own and keep up with valuation of it. It's going to be quite
How much
test.
is your art collection worth?
Exactly.
How much are your crypto NFTs worth?
Absolutely. And if also, when you start to look at things like partnership interests, these are highly complex structures, and it's impossible for somebody to be able to monitor that for all of the different taxpayers. So it's a very, very difficult practical task to get around. Now, again, California has some solution where you can defer paying taxes and all of these things, but it's just very difficult to do. It's not as easy as it sounds. And I think that it's also a problem in terms of winning the support of the American public, because we pay taxes on the value of our homes, but generally when we think of the value of all of our assets, we know that there's an estate tax at death, but that's very different than requiring people to disclose every single thing they own during their lives every year. That, I think, is going to feel invasive to the public, not just to the people who are subject to the rules, but to the other people who are thinking about the fairness of these rules.
But that question also applies to a federal wealth tax, which maybe brings us to that. So, I think to the extent these proposals are associated with anybody, it's probably Elizabeth Warren, who has had a number of them over the years. But there are proposals for different forms of national wealth tax. Something like it would be 2 percentage points of your wealth every year, year on year. And how do you think about this?
Yeah. So in the federal level, you get to avoid the problem, I think, of people moving. Sometimes people say, oh no, people are going to leave the United States. It's very hard to leave the tax clutches of the United States. And also, this is not an age in which a lot of people want to regularly give up their U.S. citizenship, right? And become a citizen in some other country.
Dubai or whatever.
Exactly. I don't think people claim that.
Particularly, I think looks bad at the moment.
Yes,
The
exactly.
Dubai move, which people in the UK, the rich in the UK sometimes
Yeah.
do, and I think has been called into question by the recent war.
Yes, exactly. And so I think that's something that people threaten will happen. I don't think that would happen here. But the bigger problem here is the constitutional issue. So our federal constitution basically has these special rules about direct taxes and indirect taxes, and wealth taxes raise constitutional issues. It's hard because we have a limitation in our Constitution on direct taxes. And the problem is that given our current Supreme Court, we have every reason to think that this Supreme Court might find a wealth tax unconstitutional, which it could very easily not survive. So all of that political effort will have been spent for nothing. And it just seems like not a smart way to go, particularly in today's world where the wealthy are able to avoid taxes so easily through this sort of highway of alternatives of tax avoidance because of our failure to tax their investment gains and their inheritances. So I think there's a lot more easier paths to follow. It's not going to be as immediately effective as a wealth tax, but it's more likely to be permanently effective.
So then what would you do?
Yeah, so what I think should happen is, first of all, we have to look at investment gains. And the problem with our investment gains is that they are never taxed to the person who owns it unless they sell the property. However, in Canada, they have a much broader rule. And that rule is that whenever the person transfers the property, not just by sale, but also by gift or at death, the gains at that time will be tallied and the person will have to pay tax on that gain. And that way, gains are taxed to the person who earned them, rather than kicking it down the road to some time in the future that may never come. I personally would, if I could write the rules, I would say that we should eliminate the distinction between capital gains and ordinary income and give them an inflation adjustment to reflect that inflation holding, and other than that, impose ordinary income rates on that gain. In addition, we need to address inheritances. So people are receiving massive amounts of wealth entirely tax-free. If you were to walk down the street and find $100, you would be expected to report that to the federal government. However, if someone were to give you $100 billion, you literally don't have to tell anyone. There's not even a line on your tax return to let anyone know, because that is seen as entirely your business. And we should not have that be the case. We should get rid of the estate tax, which isn't doing anything.
That's really true. You could just hand somebody $100 billion and you don't have to report it to anybody.
The person who hands it is supposed to report a gift tax return, right? But if it's been put into a trust, the trust has grown, it's distributed from the trust, the person receiving the property may have some flow-through gains through complicated tax rules, right? But the receipt of property by gift, inheritance, or life insurance, and by the way, life insurance is the favorite vehicle of the super wealthy to pass their wealth. When they convert it into a life insurance policy, it all of a sudden becomes non-taxable everywhere. That is received, those are subject to exclusions, meaning you don't have to even report them.
You know, one thing that the way you just described that, I think, makes clear is that there's the level of tax design. And then there's the level of the will to enforce tax design, which is to say that if you imagine the kind of reform you're talking about, you could make it, but then you would have to actually want it to work, such that you began shutting all this other stuff down and keeping it shut down, right? Like these life insurance loopholes you're talking about. But how do you think about these two levels, right? There's a level of tax design and then the level of the tax code is complex. People don't know what's happening in it. But the people who do know what's happening in it have a very, very, very strong incentive to support politicians who will allow them to keep using these loopholes or to punish politicians who try to close them.
Yeah. So let me start by confessing I am an optimist by nature. So you may need to take everything I say with a grain of salt. However, I think that this system of non-payment by wealthy Americans came about because of our particular history and particular vulnerabilities of the estate tax. So we had a system where the income tax was incomplete, the estate tax was supposed to be a backup. The assault on the estate tax in the early 1990s was so effective that even Democrats were afraid to do anything to close the loopholes because so many Americans saw it as an unfair double death tax. I think if we had a cleaner system that we could easily have, we get rid of the estate tax, we have an income tax system, it gets a lot harder to pull the wool over the eyes of the public. So I don't think it's the case that rich people can always control, always get what they want. I think that we are living in a moment now where there's more pressure than ever for this to happen. This California wealth tax, right, this is happening because the public has become broadly aware that we've got a lot of super rich people that control massive amounts of the country's wealth, more than they've held, I think, since the 1920s. Significant amounts. I think it's currently 31.7%, 32% of the country's wealth is held by the richest 1% of Americans. And at the same time, none of them seem to be wrapping themselves in glory these days, right? If we go back 20 years, we had all sorts of amazing things being done by our rich people. And there was a book that came out in the early 2000s that was called Philanthrocapitalism. And the subtitle was how the rich can save the world, right? And this was not seen as insane. Can you imagine a book today, How the Rich Can Save the World?
Ray, I'm in the professional opinion business. I can imagine anything.
Yeah. But the idea that someone would think that this would land with the public, which it did in that era, right? The super rich, they can do so many things. We should hand over all of society's problems to them. I mean, I think a lot of people would find that laughable today.
I think something that comment is getting at is sometimes people want to tax the rich because they want to punish them. It is like they don't like the rich. They definitely don't like the rich right now, right? I'm very sympathetic to the argument you're making. And on the other hand, that then sort of winds a lot of things up in moral judgment. When sort of my view is that Sergey Brin should have to pay taxes on that wealth, no matter if he's in the don't be evil era or in the
I
slightly
totally
more
agree.
evil era.
I completely agree. I think it is a big mistake to focus on rich people are bad and therefore we should be imposing taxes, because the reason I think it's bad is because when we move the conversation to whether rich people are good or bad, we are not focusing on the fact that the richest Americans have been written out of our tax system. It's as if we had a system that said people who live in Pennsylvania don't have to pay tax. Right? We shouldn't have a discussion that says, well, some of the people in Pennsylvania are good. Maybe it's okay they don't pay tax, right? It's wrong as a matter of principle. It's wrong because we need their money. It's wrong as a matter of fairness. It is wrong for so many reasons. And I think the big problem goes back to your earlier question, which is that the public is misled into thinking the wealthy are paying more taxes than they are. And that is why that with this 1% paying 40%, right? Most of the public doesn't know that the wealthiest Americans are able to avoid taxes by paying taxable income. And if they knew, they wouldn't want that system.
I find what you're telling me here to both track what people I know who have worked on crafting wealth taxes tell me, but I find very frustrating, which is that it seems like it should be possible. And the more you get into it, the harder it becomes, both constitutionally, which is one dimension of it, but the valuing and the continuous valuing and the worrying about people moving things into harder to value assets becomes a problem. And I don't know, I have wanted there to be a wealth tax as long as I've been aware of taxation. And the thing that I feel we're losing if we can't do something like it, which I just think is worth naming, is that wealth creates power. It creates a tremendous amount of power. And we're operating in this era when it's not that the rich were necessarily, the super rich, so shy about using their wealth to wield power. I mean, you mentioned the anti-estate tax campaign that was heavily funded by 18 of the richest families. But the level of like direct engagement that you're seeing now from people like Elon Musk, like they are really making the long-running fear that if you have enormous wealth, concentrations of wealth, you will have like unmanageable concentrations of political power manifest. And you can design a tax code, you know, that taxes this money eventually, but it doesn't solve the political power question in a way that I think a lot of people want to use a tax code to do so. And I'm curious how you think about that.
Yeah, I think it's a real problem, and it's a real concern. I mean, people controlling massive amounts of wealth have tremendous power in our society. And I understand that in some fantasy world, a powerful enough wealth tax will be enacted to make a sufficient enough dent in the wealth of the wealthiest people, where it is brought down to a level where they no longer have this power. However, from where I sit, that just looks like a fantasy world. That's not going to happen. It's not going to be significant enough. The public isn't going to buy it generally. And I think one of the reasons the public isn't going to buy it generally is because of something we talked about earlier, which is that to the extent it is a special tax focused on the richest people, like we have to punish the richest people, I don't think everybody in the country agrees with that. A lot of people in the country think that people who have acquired their wealth have done so because they've done great things. They've started great companies.
And that, I guess that's where meritocracy comes in at. Most people feel like if you earned your money through hard work or innovation, you shouldn't be punished, by taxes. But there are also wealthy individuals that didn't earn their money. They basically just inherited it from other great people. And, it's, probably a fair opinion that they should be taxed more because, they didn't earn it. I'm saying? If you are a Hilton granddaughter, you know what I mean? And you were born with a silver spoon in your mouth with these billions of dollars, it's not a crime that you pay more of your fair share. You know what I mean? You weren't there with Baron Hilton, building the empire and sweating it, overnight. You were a recipient of the work that was already done. So if you get to enjoy, a silver spoon life, then most of the public, I'm not saying myself, but most of the public isn't going to see a problem with you paying more in taxes.
And sometimes they have. Sometimes they have done great things. And so it paints too broad a brush. The problem with it is that we have to live in the world that we actually live in. And in the world we actually live in, I don't see that as being a solution that's going to deliver that result.
I think there's also another dimension to why you should want to make sure the richest people are paying taxes. And that is that people do what other people do.
Yeah.
I was thinking about this while reading your book and preparing for this. I pay taxes. I don't mind paying taxes. I think that is part of living in a society. Living in America has been good to me. It does piss me off that people above me are not paying taxes.
Yeah.
And when I hear sometimes I'm talking about their weird strategies, and I'm not talking about centibillionaires here, just people who spend more time on tax avoidance, you think, oh, am I being a sucker?
Yeah.
And the fact that at these very high levels, the very richest are making the rich people right underneath them feel like suckers. People don't want to be suckers. They don't want to feel that other people are getting a deal they're not getting.
Right.
Now, on one hand, you might think it would be good if this made more rich people, advocate for a better tax system, which it doesn't seem to have done to shut down the ability of people above them to do this. But I do think that it's very corrosive to social solidarity.
I completely agree.
To have this sense that there are people out there getting a way better deal than you are.
I couldn't agree more. And that's why I think a lot of that has to do with the fact that people feel like this point that you made before. Well, the regular people are always going to lose out. The rich are always going to have their way. It's always going to be to their advantage. But that is not always the case. And that's why I think it's important to think back in history to different times. So one of the times I think is particularly interesting is the Tax Reform Act of 1986. That is the last time that we actually have had any really meaningful reform in the tax system. It was under President Reagan, which was kind of surprising, but it adopted principles of a lot of from that had been around under both parties. And what it did, when we talk about high income earners and the inability of high income earners to avoid taxes, that is because of changes that occurred in 1986. Prior to 1986, we had a flourishing tax shelter business. And your high paid surgeon would have not paid taxes on their income because they would have been able to invest in tax shelters and offset all of their income.
People always talk about the very high mid-century World War II, post-World War II income tax rates, but I think this is important because some of these were not actually as real by 1986 as they look on a chart.
Exactly. So you had these high rates, but you had massive avoidance by high income earners. And the 1986 Act did something very interesting, and I think something that we should be doing today, which is it broadened the base by getting rid of those tax shelters. And they so effectively got rid of those tax shelters that we don't have them today, right? Our high income people with lots of salaries, they are paying lots of taxes. There's really very little reason or ways for them to avoid taxes. And they were a politically powerful group. So it can happen if you have people that really care about making it happen. It's not like it's impossible to make happen. And I think that is the only way to go. Our only way forward as a country is if we figure out how to have a fair tax system. And I think that
Gotta do it.
imperative, that moral imperative, is also a financial imperative, because right now our national debt is so great. Interest payments on the national debt are the third highest expense after Social Security and Medicare. It is, we are spending $1 trillion just to carry the debt this year, more than we're spending in the military. And that is not sustainable. So we're going to have to find a way to bring everybody into the tax system.
And then also, final question. What are 3 books you recommend to the audience?
Okay. The first book is The Age of Extraction by Tim Wu. This is a fantastic book that talks about how many of our companies that used to do a lot of good for the world are now, rather than producing wealth, they are doing wealth extraction. And that's not good for any of us. And it's relevant for these issues of taxing individuals and taxing companies. The other is the book, The Rise and Fall of the Neoliberal Order by Gary Gerstle. And
I like this. All past guests of the show. Tim Wu, Gary
Really?
Gerstle. Yeah, I love these are great books.
Okay, that is a fantastic book, and I will say that the title is a bit daunting, but the book itself is so readable, and it makes this incredibly important point that the country used to have one vision of the role of government versus markets, and now we, through the rise of neoliberalism, it switched to this thing of it's all about let the market run free. But the point is that it is a fantastic illustration of the swings that can occur. And pendulums swing both ways, as we have seen loud and clear in recent years. And I think it's a really good reminder that when people despair of all of the problems of the day, there is an opportunity for pendulums to swing back and for better systems to take hold. And the last book is a book of fiction, the book Crossroads by Jonathan Franzen. Fiction at any time, and particularly in these times, is just a fantastic place to live, to explore other things than the world that we're living in. And I'd say Jonathan Franzen, better than almost anyone I know, presents people's internal psychological dramas. You feel like you're watching a documentary. His writing is so real, and my only disappointment is that I am waiting desperately for his next book to come out. Crossroads is supposed to be the first book in the trilogy, and I'm sure I'm not alone in constantly checking for that second book to come up.
Ray Madoff, thank you very much.
Thank you so much for having me.
All right, that's a good breakdown
We
there.
fixed the tax code.
I'm glad we actually got to sit down and kind of explore some of the ways that, and argue about some of the ways that the super wealthy skirt taxes while, working class people pay more, and what can we do about it? Who do we, who do we address the issue with? And just, if for nothing else, educate ourselves on that issue of there just being so many ways for the super rich to avoid paying taxes, and then it's bad because it also allows them to control a lot of lawmakers through making more laws and control a lot of the things that get passed for the whole of society. So, if you got any comments, other things that we need to look out for, feel free to comment on this video. Glad you stopped and watched, and take it easy.